Hey guys, the phone's been ringing off the hook all day today, all about that trade in Apple this morning. Everybody wants to know the same thing. Why was I calling the levels that I was calling? Why did I go short when normally the bounce in the morning gets us long? The answer is we did go long first thing in the morning. We did give you the levels that we were looking for when the market opened. And as you know, I'm not a fan of trading the breakout, so what I was really looking to capitalize on first was a bounce down inside the range. Let's pull up the chart of Apple and show you what I'm talking about. So here it is. I've got the trade executions marked up so that you can see them. 269.66 was the first place that I was expecting the stock to bounce. That was down in the morning range. Looked like that was a good place to expect it to ricochet. It only ever moved up about 30 cents and then started tracking lower. The last buy line that I had in place was 268.02, and as you know, my strategy is to buy until I get to the last place that I'm willing to buy and then exit. I was looking for a bounce off the pivot line, and maybe that would get us back up into the range. When it didn't, exited the first trade for a loss right down here under that 268.02 level. Then in the very next bar, we had an opportunity for a short sale. I did that just because of the way that it was bouncing off of that line. It came down, it retraced back up into the range, had a very small gain on that, exited right here, just off the pivot line. You can see the rationale for that second trade. The short was established right where the prior long had been closed out because of all the resistance there. Thought we had a good opportunity for a move lower. Instead, we put in this 266.76 low, and that became something of an inflection point, as in the very next trade, you know that I had been using that prior level of support and resistance as a potential inflection for a long side entry. Got into the long at 266.76. Got back out again right under that 268.02 level, right about where the prior trade had closed. Then in the next bar, we had a 268.02 bounce. Stock price got up above here, tracked back down. That's exactly what I'm looking for, is that little check mark move back down into the range. That got us long back up into the pre-market trading range, right underneath here where we expected to see resistance. Got out there, placed an entry order for a short sale, got filled on that next leg. You can see here this fib retracement of this big move to the downside in the morning. Had a bunch of confluence right here. That got us short, got us down into this 266.76 level again, right where we found support before. We found support again, and we placed our exit order for the trade, and that was all she wrote. Tried to get short again at that 267.26 pivot line. Got out at 266.76. Thought that was going to be a nice little scalp, and then, of course, we had this big move down into the range. Not going to do any coulda, woulda, shoulda here. This was a difficult morning in Apple. So those were the trades as they hit those inflection points. The other things, of course, that I was talking about in the first hour trading pit focused heavily on the S&P 500. The correlation between the S&Ps and Apple has locked down to almost a 1-to-1. Watching those inflection points as they come up in the S&P 500 is critical to doing this. Those of you who are taking the course and have already started the coursework, you know that you need to keep an eye on the S&P. You also need to look at the VIX, have an understanding of how much we're really expecting the markets to move over the course of the next 30 days. When you got a VIX that's in the 80s like it was a few weeks ago, that signifies that you're expecting to see a very big move over the course of the month, something like 8% almost over the course of the month in the S&P 500. And when you have a stock like Apple that tracks very closely to the S&P 500, that gives you an indication then of how much volatility you can expect there. VIX is tracking lower now. We're back down into the travel range on it, but it's still not out of the woods. We still have a very, very volatile market, and you need to expect that you're going to see this kind of an open, especially after the market gaps higher the way that it did. Lots and lots of traders have been buying Apple over the last couple of weeks as it's down on its lows. This morning I told you to be very careful about the open, very careful about the fact that people might be looking to take profits. If the S&P is opening at a gap high like that, way up into the range, if you don't see follow through right away, you've got to get an eye on whether or not there's support nearby. In the case of the S&P this morning, there wasn't. Sellers came in, they started pushing Apple lower. Stock continued to move lower, couldn't find support over the course of the day. Look at the volume by price bars here on this Realtek data. This was my big cue telling me that the primary focus of my day was going to be below these levels. It's because when you see gaps between the volume by price like that, think about the volatility band course. What am I talking about in there? I'm talking about that acts like a vacuum. When you see these big holes in this volume by price data, this is really telling you that it might get ugly if price is trading up in here and you're in a long trade. So all the writing was on the wall. We see lots and lots of confluence over the course of the day telling us where this thing is going to go. Really wasn't a great day by any measure. That first bar of the day was a big loss that resulted in having to dig out of a hole. We all hate that. Over the course of the session, you wound up profitable, if only incrementally. And again, it's very important not to allow your bias to affect the trading. It's got to be the market's bias that's telling you what to do. It's never a good idea to decide that the market has to do something because you want it to do it. You should always try to err on the side of letting the market tell you what to do. Market's the boss. All right, you guys, if you have any other questions, shoot me an email, adrian@traderinsight.com. I'll see you guys in the first hour trading pit first thing in the morning.